Hi guys, Rita here from M5 Property Varsity. In this video, I'm going to show you exactly how I made my first 2,000 rands from a rental property. I will break it down and give you all the costs and the income optimization strategies, and I will show you how to make it passive so that you don't have to work for your tenants, but rather let the property work for you. So grab a pen and paper and get ready to learn. And while you're doing that, please could you hit the like button so my kids think I'm cool on YouTube, and also to get the most out of this training, please go ahead and ask as many questions as you want in the comment section, and I will try and answer all of that for you. Right, so let's get straight into it then. First of all, there's 4 sections that you need to know when doing rental property. The first section is income. Your income section. So what is that? That is obviously rent. That's a very obvious one, right? So in rent, the second one could be Wi-Fi. If you were selling Wi-Fi, because yes, you could do that. The other one is electricity. If you have prepaid electricity, you might be able to get that back through a prepaid electricity meter. All right, so rent, how do you increase rent? Because now the main aim is to really increase your income, right? So under rent, you can either rent to one family, right, which we call a single buy-to-let, or you can even rent rooms in a house and then have a common area that people can share, like bathrooms, kitchen, lounge, etc. Or you can also rent blocks of flats. So it's one property, but there's multiple families living in that property. So those are all the different ways. But in my example, as I'm going through this today, I'm going to show you from my first property and how that worked. My first property was a single house, and I turned it into 3 separate living units. So there could be 3 families living on my property. One was a bachelor's flat, one was a house with 3 bedrooms, 2 bathrooms, and the other one was a flat on the property, which was a 2-bed, 1-bath flat. All right, cool. My total rental income was 16,200 rands. And I managed to recover 1,000 rands from electricity from the prepaid meters in all of these units. Second part is the expenses. You can also have laundry maybe in here if you provide laundry services on the property. Expenses. We have levies. So if you buy a rental property in a complex where there's a body corporate or multiple people, like on an estate or something like that, you will find something called levies. And those are things that need to be paid by the homeowners in that estate to the homeowners association or the body corporate to maintain the common areas in the estate, like your roads, your pavements, your lights, the parks, if there's maybe parks and things in there. So that's what that money is for. Then you also get maintenance. So maintenance on a property, that is for, do you need to paint? Did the door break? But sometimes your tenants will break it and then you have to pay it back. But things like waterproofing of wooden items on the property, painting, clearing out gutters in winter after the rainy season, maybe a roof leak that you need to repair. So those are all the maintenance items. Then you get management. So if you use an agent, which you should if you want to make it passive, you can then pay them to rather manage this property for you. Then we have utilities. So those are your normal things: water, electricity, but you also get sewage and waste removal, right? Those are all billed separately by council. So don't just look at your water and electricity, you also have to pay these other things. And the more bins you have on a property, the more expensive is your refuse removal. Then you have your rates and taxes, which is property taxes that you have to pay to the municipality. And then if you have any Wi-Fi that you might be installing for the tenants, especially when you have room rental and you're sharing. You might want to create that Wi-Fi environment for them or have the facility available for them, but then you might be charging for that again as well, separately, right? So this is just, if you're not charging, make sure to add it into your list of expenses. Right, so on my property, I didn't have any levies because it wasn't in a complex, it was a standalone house. Maintenance, I always planned for 10% of my rental income. That was 1,620. Management, I also planned for 10%, also 1,620. Utilities came to about 2,000 rands a month. Rates and taxes was 700. And then I didn't provide any Wi-Fi or laundry services or extra things like that. So these are the basics that I had. Now, the key thing also to know about maintenance, when you have a new property that you're just moving into, whether you're buying it from someone or a new house, whatever, there's always little issues that come up that you didn't foresee. And I always planned that to be more like 20% in the first 3 months of the property, just for my budgeting purposes. And then after that, it actually drops to around 5% or less even, once the property is stable and you've sorted out those niggly things right in the beginning. And also remember, this might not happen exactly like that every month, but make sure that you put that money away, because you might just need it later when that tenant moves out and you need to repaint the place or whatever it might be. So make sure that you include that there. So if we add all of this up, that came to 17,200. And you need your bond amount at the bottom. I bought this property for 900,000 rands, so my bond amount is 9,000. Now with the interest rates dropping, that's definitely less. But for budgeting purposes, when I bought this property, it was 9,000 rands. Right, so the total in this is, so the total over here is actually 14,940. Right, so then the next step would be for me to calculate my cash flow. So my cash flow amount over here is literally just your income, total income, minus your total expenses. Okay, so it's 17,200 minus 14,940, and that will actually give me 2,260 rands. All right, cool. Next up is to calculate our investment amount. Okay, so the investment amount is everything that you had to spend cash on the property to make it work, to get it to be yours in your name. First thing would be your deposit. Second thing would be your closing costs, which is basically your transfer fees and your bond registration fees. All right, so yes, there's two different things. Transfer is to get it to the deeds office into your name. The bond is the charge that the bank charges to register that bond on your property at the deeds office. You normally also work with two different attorneys in this process. So there's closing costs, there's a valuation that might be part of that as well, that the bank will force you to pay for, because they have to go out and value the property to see if it's really worth the amount you're paying for it. And then also if there was any renovation required. So like I mentioned before, for me, I paid a 50,000 deposit. My closing costs and all of that was roughly around 37,000. And my renovation was 100,000 rands. Now the reason it was that much was because it was just one big house that needed renovation, but I also created those separate living units. So it was 100,000 rands. So the total on this would be 187,000 rands. Next section that you have to do is you have to look at your ratios. because you want to know, is this a good amount even that I'm paying or that I'm getting? Is it good for the money that I spent? So the first important thing that we calculate is cash on cash return. Right, so a cash on cash return, that would be, is calculated through, and you want to calculate it based on the cash that you spent, not necessarily the bond that you got, because we want to be able to know how much money are we making on our money. So for instance, if you had money at the bank and you earned 1,000 rands from 100,000, then that would be, 1,000 a month from 100,000, that would be 12% for the year. Obviously, that's like not possible in the bank. So, but that is basically what it means. So if you had the cash, what is the money you're making on that cash? So here, it's basically calculated as your annual income or annual cash flow divided by your total cash that you have spent, total investment. Okay, and in my instance, it is the 2260 times 12 divided by 187,000 rands. Then if you times that by 100 to make it a percentage, it comes to 14.5%. All right, cool. Now, whether that is good or bad literally just depends on what is your investment goals, right? What is it that you are trying to achieve? Is it good because you only have other option is to put it into the bank? Then it's fantastic because the bank might give you 2% if you're lucky. So you determine whether it's good or bad from your other options and your goals. If you could get another investment, if you put your money somewhere and it's as safe as this one would be, then what is the percentage you would get from that? And that is how you determine whether this is good or bad. But this is very typical of what I would do for a rental income property. Now, how do you make this passive? That is the key thing that we have now, right? So what does passive mean? What does passive mean to you? And you can literally calculate your return on time as well. Like we calculated return on income here, or our cash on cash return, you can actually calculate your own return on time. So if you're a salary earner, if you have a business that you run, what's that income that you are getting as a person, right? So if I take my total salary, I typically spend 160 hours at work, right? So you take that salary, you divide it by 160, what do you get? All right, that is your hourly rate. Now, salary employees are going to ask me about bonuses and company perks, whatever. Include it, don't include it, include your tax, work on your gross, and you can get your return on time calculated. So say, for instance, you are earning, let's use an example here, 200 rands an hour, right? And if you spend your time on this property making 2,260 rands per month, okay, and you spend maybe a couple of hours talking to an agent, because remember, that's why we have the management fee, because to make it passive you need somebody else to do the work for you. So I always get an agent, a good local agent in the area, to manage the property and the tenants for me. I look at what do I do? I look at my statements every month because I want to make sure that whatever he's given me is correct. I review quotes. If there's maintenance to be done, he gets all the quotes. He gets all of that. I just need to give approval for that. So maybe I spend half an hour on that every 3 months or so. But let's call it that. Looking at my statements, making sure the maintenance gets done. If there's a geyser burst, I will go into an app, I'll log it, and I'll give the agent's details for whatever to be sorted out. So maybe, let's say that I spend 2 hours a month, basically, on this property, which is very realistic. So that means that I've just earned 2,260 divided by 2 hours, right? I only spent 2 hours on this. I got paid, let's make it another color, 1,130 rands per hour. So is that return better than getting paid in your job at 200 rands per hour for 160 hours? Think about that. And you can literally calculate whether this thing is worth your time. Not worth your money, but worth your time. Now, how to make it properly passive? Like I said, your management agent, make sure that you have a good one, right? Automate as much as possible. If you need to get tenants and the tenants have an issue, if they have a geyser burst, make sure that you use an insurance company where you can just go onto an app, click a button, click, 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 done. And that automation comes in whereby I give the details of the agent for that thing to be sorted out. I don't try and contact people and coordinate time when he's available and all that nonsense. No. The agent sorts out all of that for me, and I'm happily paying him 1,620 for a whole month's worth of work. Yes, maybe he doesn't spend all his time on it, but still, I'm happy to pay that. So that is the important part of making it passive and determining whether it's worth your time. I hope you enjoyed this video. Please subscribe to the channel if you want to see more like this, and you're welcome to follow us on Facebook and everywhere else where we are. We're everywhere. And if you want to subscribe, there's a membership option where you can become a member, and we have full training courses going into the total details of this and other topics like this, and just give you all the downloads, the calculators, so that you don't have to worry about how to calculate all of this stuff. It will go into your calculator and you just punch in your numbers and you get all of that. So just go and grab it. I'll put it on a link in the comment section for you as well as on this video. Hope you enjoyed that, guys. Bye.